24 hours until gold price does an about face. Enjoy while you can. Precious metals follow a pattern. Just like Wall Street, the anticipation of economic reports offers a shift in the market, but as the smoke clears, we will see the true market value of gold. In this video, I'm going to break this down and show you the data just released, the data that lays out this massive change we will see in the price of gold. I'm going to break this down so you're prepared and don't get left behind. 24 hours and gold will do the unthinkable. Let's start on Kitco. This heading says, gold near highs after New York Manufacturing Index misses expectations again in May. This is the data that has pushed gold up. We were touching $2,400 an ounce for this tiny little ounce of gold. It's nothing. It's 1 ounce, $2,400. It's really quite remarkable. This article starts, manufacturing activity in the New York region showed continued weakness this month, even as inflation pressures eased, according to the latest figures published by the New York Federal Reserve. So when we see weakness in manufacturing, we feel like the economy is contracting, which it's not. We feel that way, and that pushes people into the safe haven of precious metals. This is one of the main reasons we got a big bump over these past 48 hours. Even the anticipation of this data coming out caused a bump in precious metals, both gold and silver. Let's keep going. This article says the regional central bank said on Wednesday that its Empire State Manufacturing Survey declined to minus 15.6 in May after coming in at minus 14.3 in April. The data was worse than expected as consensus forecasters called for a minus 10% reading. So that is definitely worse than expected. Gold price shot to session highs following the 8:30 release, which came out at the same time as the US CPI and retail sales reports. We're going to get to that in a minute. That's going to be, you're going to see where we're going to be reversing course on that. The precious metal continues to trade near the top of its daily average. Really, yesterday, by the end of yesterday, we were close to 2,400 an ounce, and we touched 2,400 an ounce. I don't know how long it stayed, but we're already starting to reverse and come back down. This article says the inventories index came in at 2.0, indicating that inventories were steady, and the delivery times index inched down to minus 9. So this data presented on Kitco is really focusing on New York Manufacturing and New York Manufacturing Index, and what it's saying is that there's possibly a sign of the economy contracting, but that's really just one index, because what we see on Reuters is the complete opposite, and this is where gold is going to do an about face. Now, this typically takes a lag. The pattern for silver and gold typically take quite a lag, and much of that has to do with Wall Street, because Wall Street is anticipating these economic reports that come out, and that starts to cause things to rise, meaning if they're feeling confident, they're going to go all in, and Wall Street is going to take more risks. And when that happens, people feel more confident in the economy. Whenever there's confidence in the economy, the price of gold or silver is going to have the reverse, right? Our price is going to go down. When people are feeling more confident that they're going to get a return on their money by putting it into traditional markets like Wall Street or treasuries or the dollar in general, then precious metals are going to go back down. Now, that's exactly what we're seeing here. This is Reuters, and this says, Fed gets some good news on inflation progress. And it starts by saying, Federal Reserve policymakers waiting to see renewed progress on inflation before reducing borrowing costs got some encouraging data on Wednesday with a government report showing inflation eased a bit in April. The 3.4% rise in the consumer price index from a year earlier and the 0.3% increase from March shows the Fed still has some distance to go before it achieves its 2% target inflation, but the report broke a 3-month streak of hotter than expected readings. And this is key. It broke a 3-month streak of hotter than expected readings that had sapped Fed policymakers' confidence in a narrative of steadily easing price pressures. An increasing number of them had warned in recent weeks that rates would need to stay higher for longer, but now people are feeling more confident. And as that we see that confidence play out, we've already seen it on Wall Street. Just in the past 24 hours, Wall Street is taking more risks. They're coming out of those stocks that are the safety stocks, like those Magnificent Seven, they call them. They're pulling out of those. They're taking more risks, more futures, and this is already pulling away from precious metals. And as this plays out, we're going to see in the next 24 hours, we're going to see this weekend, gold and silver are going to start to come down. And let's continue. Here's the next data point. This says, will shelter inflation slow? Shelter, it's weird. I don't know why they use the phrase shelter. That's just, they're referring to housing, but they call it shelter. Shelter is a major portion of the consumer price index. Price increases have been ebbing slowly, but the way the index is calculated suggests faster improvement in the months ahead. Now, shelter is interesting because we want the value of homes to increase, but it also could be played against us, meaning the Fed can say, oh, look, inflation is causing the housing market to bubble. It's ballooning. We have to get that down. Or they could change the narrative however they want. They could change it to say, look, we need housing, this shelter data point to increase more, right? So it's kind of a double-edged sword. This article says core CPI, which strips out energy and food prices and is seen as a better gauge of underlying price pressures, rose 3.6%, its slowest in 3 years. So this is showing inflation slowing down. And again, this is the positive news that the Fed wants. For us as silver stackers and gold stackers, it's going to hurt our price because we have an inverse relationship to all of this data. The article continues. Analysts crunching the numbers said the CPI data suggests the Fed's preferred inflation gauge, the Personal Consumption Expenditures Price Index, CPE, likely also eased in April. JP Morgan chief economist estimated the core, sorry, I said it wrong, PCE. I know that came out of my mouth strange. PCE, that's the Personal Consumption Expenditures, PCE. It gained 2.7% last month from a year earlier, down from 2.8%. These inflation readings are making people feel more confident that there will be a cut. They even say that we're looking at 4.7 coming up. This says, after the data traders firmed up bets on Fed rate cuts in both September and December, with rate futures contracts pricing pointing to a year-end policy rate of possibly 4.75 to 5. That's what we all want. That's what we would all be excited to see, 4.75 to 5%. If that plays out, I will be as happy as you are. Anybody that owns a home, anybody who's struggling with a HELOC loan, right? And anything in that area, any of those products, those debt products, we are all just waiting for that interest rate to drop and to ease our pain. Now, I started this video saying that in 24 hours, we're going to see that this data impacts the price of silver and impacts the price of gold. And historically, this is what we see. The anticipation of these reports coming out causes people to go into the safety of precious metals. That's what we've seen this week. We saw a nice big jump in gold, a big jump in silver. And then as the reality plays out and people really dig into the numbers and see what it's telling us, specifically today, this is telling us that we are showing more control over inflation. The economy is showing strength. That's going to make people feel more confident in going into their traditional areas to invest, going into Wall Street, going into treasuries, right? We're going to see strength in the dollar. This is all of this data is pointing in that way. And when that happens, that means people are pulling out of gold, pulling out of silver, and we're going to see that reflected in our price.